All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks for taking time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time, here on the GAR Capital YouTube channel. It is Thursday, February 9th, 2023. Feels like this week's gone by really, really slow, but it is Thursday. Felt like yesterday was Thursday, but either way. Welcome aboard. I am starting to recover from this cold slash sinus, whatever it is. The one thing that's worked for me has been Mucinex. That's kind of cleared up the congestion, so I feel better enough. At least I'm not, just sitting in bed and just kind of rotting away, which is good. Let's go ahead and get to work. Dow futures up 239 points, Nasdaq up 170, S&P 500 futures up 0.85%, 4165. Russell 2000 up 0.82% at 1965. Crude oil down 0.78%, even with a weaker dollar. The dollar is down 0.73% at 102.65. I look at bond yields. We had a very nice demand 10-year Treasury auction yesterday, which brought down yields. 3.582% on a 10-year Treasury yield. 1925 on the VIX. That is down nearly 2% this morning. Gasoline futures down 1.37%, $2.42 a gallon. 1900 even for gold futures, up 0.5%. Silver futures up 0.58% at 22.55. Copper futures, again, another risk on indicator, $4.10, up nearly 2% this morning. Euro dollar, again, we talked about that correlation, euro and the S&P. Euro is up, S&P is up as well, 107.88 on the euro, up 72 pips. Dollar yen, another proxy for yields. When the yen is down, yields go down. In terms of the correlation we talked about, 130.46, that's down 97 pips. Dollar yen, pound dollar, up 123 pips, 121.92. The dollar is getting smoked this morning. Bitcoin futures, 22,840, pretty much flat, even with a weaker dollar. 1646 on Ethereum, down 0.12%. Want to go ahead and get really quickly into this chart here that I saw. Let's go and take a look at Bitcoin futures, and let's go and take a look at the weekly. And something did stand out very, very interesting. Take a look at this. We're about to get a death cross on Bitcoin on the weekly chart. Not great. We talked about how that 25,000 level is very, very key in order for to see a little more momentum to the upside and see we start filling some gaps, at least on the future side, to around 28,867. But that death cross does loom. If that does happen, we expect a little more downside on Bitcoin. The only thing that could flip that would be a dollar weakening, which has its own death cross. So again, keep an eye on Bitcoin. Even with the dollar being down today, it is flat. We should have it being higher even with the stock market. So the correlation between Bitcoin and the stock market isn't exactly one for one, but we're going to be expecting a little bit of weakness if we get this death cross on Bitcoin. So just keep that in mind. You may get some more opportunities to take a look at Bitcoin at a cheaper price, maybe get below 20,000, maybe retest that 20 weekly moving average around 19,044. That doesn't seem out of proportion or out of whack. So again, if you are someone that's trading like a Riot or a Mara or any kind of Bitcoin type proxies, just be careful because that death cross does loom on the weekly. So again, I'd expect a little weakness on Bitcoin or a little more volatility to the downside moving forward. And again, I love Bitcoin, I own Bitcoin, but again, the charts are the charts. So keep that in mind. A couple of things I want to take a look at this morning. 10-year yields. Again, we do have a gap to fill here around 35.836. If we do break down a little more, that should boost the NASDAQ a little higher. So keep an eye on that. If we bring up the daily, you can see that we do have that gap to fill at 35.59 on the daily, but 35.36 on the hourly. I expect that to come relatively soon. If not, you do have a gap to fill, at least if we get a bounce in terms of yields to around 36.48. So again, about 36.48 to around 35.47, that's kind of your range right now. So again, lower yields, we know that's a benefit to the NASDAQ. The dollar today looks like we are testing that 200 hourly MA of around 102.53. Let's go to the daily. Again, we still know what our target is. We want to get to that 102 level and finally break down And if we do break down, maybe we get a weaker than expected CPI. I talked about that on Twitter yesterday. CPI does loom next week. PPI looms next week. A lot of stuff going on. Go ahead and include OPEX on Friday. So again, some volatility ahead, possibly. We will see. 4,200 being a very key level on the S&P 500. Let's go over that. I went ahead and tweeted all this last night. Let's go ahead and take a look at the daily and how important that 4,200 level is on the S&P. If we do break 4,200 on the S&P 500 spot, that brings us up 20% from the lows. And again, by definition, that is a bull market. You can see it here. 41.95 is 20.09. Again, that's higher than the previous bear market rallies that we had in July and in April. So again, and previous bear rallies that we've had in 2022 did not break above the 200 MA. We are clear above the 200 MA, and now we have the golden cross, as we know. So again, I don't think this is a bear market rally. The only thing that could change this here is that 4,200 level doesn't break, and that becomes our resistance. If we have our CPI number come in a little hotter than expected, we expect to come back down. And the levels I expect to come back down would be the trend line. And again, it would be a very structured support level for us. If we can get back to the trend line and bounce, that would actually show that the bull market actually has some legs and it is structured with supports being held. And again, to the move higher, that's what we want to see. So again, let's not panic if we do test that trend line, or maybe even test the 20-day around 40.40. Again, that's going to be completely natural. In a sense, that would probably give a lot of bulls availability to buy the dip if that's the case. And we want to see how strong this bull market is. Really, at the end of the day, we want to see, can this bull market even handle even the slight deviation in terms of data? Seems like just lately, the only thing that's been affecting the stock market has been the Fed speakers that we've been getting. The Fed speakers like Neil Kashkari and other voters of the FOMC. And you can almost like pinpoint it every time a Fed official speaks. We dip down to this trend line. Sometimes we broke it. We talked about how support can be like a mattress. It can sink in, doesn't have to be a board and bounce immediately. But again, a very structured trend to the upside. Let's see if we stick to that. Again, so now with your support being around 41.56, that's higher lows. Let's see if we can structure and keep going higher. In terms of what I traded this week, IWM I did have, so I want to go ahead and give a little bit of a lesson on this week. Value stocks are not the big movers this week. I wanted to get away from tech last week since tech moved so much higher, and I wanted to go ahead and play a little bit of a rotation into IWM. We didn't get that, obviously, and it's just been chopping around really since the beginning of the week, since I had it last week. I have the 200 calls. I'm going to see if I can get to around 196. If we get a break to the upside, I can see if I can salvage some premium. But again, really everything is the focus is on the beaten down names that have gone down in 2022. For example, NVIDIA. We talked about NVIDIA yesterday. NVIDIA soared right at the open. I didn't trade it at all, but again, I'm watching it to see if it breaks 230. Why? If it breaks 230, you have that gap to fill here. But then you also have a little more momentum if we continue to go higher to around 258. So 230 being that first level that we want to break. If we can get there, I was looking at NVIDIA yesterday and see if we got to 220 to see if I can buy the dip, but I didn't. I went ahead and chose Tesla instead. And with Tesla, again, the momentum is to the upside. Look at this chart here. We have two levels of support that we had before the October flush. We are now above 203. We filled the 210 calls for this week. We are now trading at 208.15. Members of the Discord, as you know, it expires tomorrow. If you see a gap up today, just go ahead and take it. Be happy with your trade and move on. In terms of targets on Tesla, I also have the next week's 240s. So again, the 203 level breaks. The target is next is around 218 to around 227, beating your 200 MA. And again, look at the momentum you have. You also have the 20 breaking above the 50 MA. You also have the break of the 100 MA. And then you have the gap to fill here at 261. The only downside risk here, guys, is you have a gap to fill here at 146.45. Now, could that be a possibility? Absolutely. Absolutely. So there's always downside risk. But again, a break of 203. Let's see if we get to 220. This is a name I want to keep hitting if we have momentum to the upside. So names like NVIDIA, names like Tesla. Let's take a look at Meta. Meta also has a gap to fill to the downside. If that breaks below 180, I would be taking a look at puts because you got all the way down to the 200 MA of around 152, but then you also have a gap to fill to the upside of around 289. So pick your horse here. There is some momentum obviously in tech as we go. Google, as you know, came down as well with that AI presentation that they had. I don't see, there's a gap to fill at 110. Let's see if we can break above 105.05, which is the 200 MA. We are now at $100.45 on Alphabet, formerly Google. If that does break, I'm going to take a look at getting on those 110s for possibly next week. But again, just be careful with the CPI number and PPI number next week, plus OPEX. It might give the bears an opportunity to short, if not the bulls to take profits. As we know, seasonality is coming. We talked about the dips, possible dips. So again, next week being kind of the middle of the month, right next to Valentine's Day. The day after Valentine's Day is CPI, I believe. Let me go and make sure. Let me make sure if that's the case. Next week on Tuesday, yeah. Tuesday of next week, the 14th, Valentine's Day, we have CPI. So it could either be a love fest or a Valentine's Day massacre. Who knows? But it is all about news right now. It's all about Fed speak. It's all about economic data. Very, very important. So in terms of Tesla, that's what I got open. We should be able to catch that this morning. So if you guys are in the trading room in our Discord, again, feel free to take it first thing in the morning and enjoy your profits. Leave a runner if you like. And pretty good week. Only IWM didn't work this week, which kind of sucks. But it happens. That's what happens. All right, good morning. Tesla and Dixie. Yes, the Dixie needs to break below 102. I do have Tesla calls for next week and this week. The 210 calls I'll take in the morning. The 240 calls I may just let ride depending on where we are. Obviously, the momentum is to the upside. So you're planning to close those 210 Teslas that open today. If the gap holds Maximo, that is a big 10-4. I will take it this morning. I'll probably leave a runner and see what I can get. Maybe I can squeeze a little juice out of it. But more than likely, I'll just take it and be happy with the gains since this week has been an absolutely stellar week with the team. That would give us this week, where were we? In terms of the week, let's see if I can get that number for you here. Yeah, we had NVIDIA this week, Apple, Bank of America, and Google. IWM, let's see if we can get at least some premium back. And Tesla. So if we get that Tesla this morning, which I believe it will with this gap up here to 207.87, that should give us five winning trades this week with one loss being IWM. So a really, really great 2023 to start. And like I've said to Investment Club and to our members, really these dips, again, until you get to that trend line of around 4,000, all these dips are opportunities to buy. The question is, how much of the dips and what are you looking for? Again, I think the focus is still on tech. You're focusing on upside momentum, but again, the CPI looms next week. And I'm looking at the CPI number. Keep in mind that the forecast is elevated, 0.5% month over month. So again, that's probably due to commodity costs being a little higher, oil being a little higher. Remember, eggs were higher and all that good stuff. So core CPI being elevated as well in terms of the forecast. Month over month, last month was negative 0.1%, a deflationary reading on CPI. But the core CPI was up 0.3%. We're expecting higher inflation, at least in terms of forecast. We'll see what we get on that day on Valentine's Day, Tuesday. Yeah, seriously, you guys are killing it this year. Thanks for that. Hey, you're welcome. It's a team thing. I'm so very proud of you guys sticking with us. Bear market or bull market, GAR Capital is here to stay. We have traded it. I've been doing this since 2014, seen a lot of things, as we know. So again, cheers to a new bull market if we get it. Technically speaking, if we get to 4,200 SPX, we are in a new bull market, and I'm glad that you are here to join me for it. Hey, Carlos. Hey, Jacobo. What do you think about Albertsons since Kroger is buying them? What are your thoughts? Thank you. Let me go and take a look at Albertsons. I don't know the stock ticker for Albertsons, but I'll take a look. ACI. Let's take a look at it. In terms of trading or investment, that's really the question. Let's take a look. Jacob, I don't have a PE or anything like that. Quarterly financials from December, revenues up 8%, but their net income's down 11% and net profit margin's down 8.5%. I didn't read any news that Kroger is buying them. I don't see any movement here on the stock. As you can see, it's been pretty much dead money since November. Not much going on there. I don't know what exactly you're trying to see. Maybe we get a pop or something, but nothing has shown there. If you break above 23, maybe you can go ahead and find some momentum higher on the daily, but there's nothing really there on ACI. But if you're taking a look at some names that may have some room to run, I would say tech has the better juice, at least in terms of momentum. In terms of investment, let's see Kroger instead. Kroger again, back to December, pretty much back to these kind of staples. Really since November, it's been pretty much, December, it's been dead money. Not much going on there. And that's something that I also wanted to go over too, is the Dow. The Dow being fully, not fully, but a little more skewed to value, and NASDAQ being compared, NASDAQ being, higher beta, tech, more momentum. You could see how the NASDAQ really hasn't done much since 2023 started, and yet tech is getting all the love. So you're getting a rotation out of safety and into more of the tech names that have been absolutely crushed. For example, Netflix. Again, we finally filled that gap. I got an alert at 402. If we finally break it, you got another gap to fill at 505. So again, you got to be a little more fluid on what you're trying to look for. If you're looking for stability in the markets, again, you can buy a Berkshire Hathaway, you could buy a United Healthcare, and even United Healthcare is breaking down a little bit, but again, still holding that 460 support. Once it gets to 441, you're taking a look at a possible gap around 405. Once you get to 405, that might not be a bad place to take a look at a UNH. Merck, who I've traded before, and again, kind of fell from its all-time highs. How about this? The FTSE in England, new all-time highs. The German DAX, new all-time highs. When is the S&P going to join? And the reason the S&P has not joined is because of tech. And tech has been beaten down so badly, but now it's starting to come around a little bit. This is the equal weight S&P. Again, all 500 stocks put together, no weights, no nothing, and you can still see we're above the 20 moving average, and we're above that trend line with a golden cross. So value isn't exactly dead. It's just being rotated out with lower rates and a lower dollar. That still gives a lot more love to high betas and tech names. Let's go and take a look at Disney. With their report of laying off 7,000 workers, but they are reinstating the dividend. We are now trading at 119. 119 is right there at that gap fill. I did not play Disney, but I was watching the 120s. I just said, you know what, I'd rather just do Tesla instead, which was a fine answer. I don't think that's anyone's going to complain there. But look at Disney here. Once you get to 120, don't be surprised, reject down to 116.24. Gap to fill, bounce right down. If you're holding Disney calls, I'd take them. If not, you're probably taking a look at a 125 resistance. And if that's the case, then it gets really interesting on Disney, because Disney has been absolutely brutalized in terms of the stock from around 203 back to last March, cut in half, more than half, to 84 at the lows. So we got a lot of room to go higher in terms of Disney if the momentum stays in. So I hope that answers you guys' questions this morning. Okay, just a reminder to everybody on Discord again, if you have Tesla, you could take it in the morning and be happy with that, and a great week. So congratulations all if you're part of us. And you're not part of the Discord group, make sure that you do join us. If you like these videos, we'd love to have you on board, and hopefully you can ride this bull market with us. Good day for the S&P. Disney and Pepsi beat pretty good. Really just going through that trend line. Really the big test for the bulls, young Danny, is going to be next week. CPI being big, and OPEX. Could we start breaking down a little bit? Hey, you know what? It fits that seasonality narrative. The last time we had a big move, or in terms of big economic data, was FOMC last week. I bought Q's puts as a hedge. It didn't work. Do I buy Q's puts for the CPI? Could be prudent, but again, expect those put premiums to be a little elevated. I'm going to keep an eye on the 4,200 level on the S&P 500 futures. If the 4,200 level kind of gets around there, we get about 40 handle move, I'm going to start taking a look at some insurance puts on QQQ for next week ahead of CPI. So again, just trying to be prudent, just trying to buy some cheap insurance, especially when the stock market is higher. The same adage goes, like we talked about on the newsletter, buy insurance when you can, not when you have to. Price to add on Google, there is a gap to fill there on Google, or GOOG, that's what I look for. Let's take a look at it on the daily. There was one more gap to fill right here. It's at 94.45. That's a pretty good level to take a look at a possible buying. And you also got one more here at 89.48. Let's say if we get there. But if Microsoft keeps eating its lunch with AI, definitely a possibility. But I'm looking for more upside move on Google. I think it was down 8% just yesterday. Again, that's a little too much for such a mega cap name. That usually doesn't last. So again, remember, Google has a lot of cash on hand. They got engineers. They got a great CEO. Let's see what Google does. Again, if it breaks above 105, I'm taking a look at those 110 calls as well for a quick turnaround to fill that upside gap. So you're right between two gaps. You're between the 94.45 gap and the 110.89 gap. So right now you're kind of in a weird little place with Google. I think there's better opportunities in other names until you start breaking some levels. Maybe you break below maybe this 20-day moving average here around 98.69. Remember, the 20-day is a big momentum indicator, as we've spoken about before. If we break below that, then I would take a look at the 94 puts. And again, if we break above the 105.05, I will take a look at the 110. You're right between the 200 and the 20-day. So kind of no man's land right now with Google. So I think best to just kind of stay away for now. There's other names out there that are a little better off in terms of momentum. All right, guys, we'll go and leave it there. Have a great rest of your morning, and I will catch you guys tomorrow for the morning note. Glad I'm feeling better, and I'm glad you guys have joined me, even though I was sick the last couple of days. Appreciate y'all. We will see you guys tomorrow. Cheers.